What's up everyone? I am 7-Star Mike, and today I want to talk to you guys about trades that are profitable but not good. Now some people think, hey, if you went into the stock market and made money, you did good. And while that's true, we never want to lose money. So anytime you make money, sure, it's a good thing. I don't subscribe to the fact that a profitable trade was a good trade. So today I'm going to show you guys what I did with Tesla for one of my trades that made money, but it wasn't a good trade. Let's take a look at Tesla. Now let's start with the actual trade. This is the Tesla weekly 810 calls. Now my first mistake was I actually wanted the 800 calls, and this was a stupid mistake because I was outside trading for the morning and the sun was beaming right into my eyes for most of the morning. So before I placed this trade, I actually came inside and my eyes hadn't adjusted yet. So I thought I was getting the 800 calls, but I was apparently hovered over the 810. But once I realized the mistake, I was already in the trade, so I wasn't going to close it out. Now, I was going to go for that quick $100 chuck, and $14.97 was the entry. This was trading at 16 by 1620, and I did a market order, right, of course, when a red candle comes in, so I filled at $15.75. That's the dangers of doing a market order, but even with Tesla, I still do market orders unless the spread is really extreme. So this was a $78 trade. Nothing to really write home about, but $78 is better than losing money, so I'll take it. You can see this was only an 8-minute trade, but that was the setup. Tesla weekly 800s is what I wanted. 810s is what I got into for $78 gain. Now let's take a look at the chart. So here's the chart. We're going to start with this so you can see why I have these two levels drawn here. This first one at the bottom was basically a resistance level here early in the morning before it consolidated, and this one at the top here was the high of day prior to where I was entering the trade over here. So this is 801. That's kind of where I was looking for the trade to go to, and then I was going to evaluate what it looked like when it got there. That was the trade idea. That was the chart levels I was looking at. A break above this 796.44-ish area was an entry. 801 was a target, and the entry was 1440, so right over here was where I entered. Now I'm going to switch over to the picture view so you can get a clearer understanding of what the trade looked like. So this is that lower level that I was looking for an entry. So what I saw was it broke above that level. The next candle came in and it was above there too, but got pushed back down. So I was kind of waiting to see if this level would hold. After a few more candles, you see that it didn't. This one here, it actually started way above up here. So we had these two and then this big third candle dip, then green came in, and then this one was green to open. So that's where I entered the position. So the stop loss would have been below this low here. You can see it wicked there, but it never closed there. So I was in this one for the long haul, 8 minutes being the long haul. So entered on this candle because it opened above that prior resistance level. Again, 801 was the target. You can see that level up here. What I got here was this big spike here, and that's when the contracts went to 1640-ish, I believe is where they were. And then through these candles here, they dropped a little bit. So this candle opened here and then just dropped right back down. That's where I closed it, figuring I was going to just lock in a quick $100 and move on to another trade. You can see it dropped, but then it came right back up and closed basically right where it opened. So the reason this was a bad trade, even though it made money, was because it was still on an uptrend. Okay, it was basically on an uptrend. It wasn't near support yet where it was a threat to break where I would have had to close it. It was a profitable trade, so I had some cushioning where I could have sat in this one. And if you see over here, this big candle here, this took it way above 801, which is what I was looking for out of the trade. Now let's go back to the picture view so I can show you a few things here. Okay, so this one I have this trend line drawn in. You can see it was on a nice uptrend this whole time. There was no reason to exit this trade prior to seeing what it was going to do around 801. And here's the candle where it busted through 801, and I closed at 1575 over here, not following my trade plan. When it busted through 801 to the upside, the bid on those contracts was 1705. So even though I made, this was $78, yeah, great. I'm not going to complain about making money, but from 1575 to 1705. And this isn't one of those trades where you say, oh, if I held on, it would have made this. This was actually what it was at when it actually reached the level I was looking for. Okay, so I wanted to stay in until 801. I saw this big candle and then kind of stopped in its tracks, stopped in its tracks, stopped in its tracks, and got pushed down. So I just said, hey, I'm going to close it for $100. The goal was to hold it through 801. You can see this massive uptrend. There was no reason to close it unless it got below this area here, and it did what I thought it would do. I closed at 1575. It was 1705 when it did what I wanted it to do. So that would have been a decent trade. However, I closed before the trade had a chance to work out. So the trade made money, but I still don't think this was a good trade because I didn't follow through on the full plan, and it ended up costing me a little bit of gains. Now, again, it was a profitable trade, but I don't like this particular trade. I'm happy that I made money instead of losing money, but I need to do better next time around.